Welcome, Adam and Christian, and thank you for spending some time with us and answering some questions from investors. So this was everything that I had to say, and the word is yours now.
Thank you, Anas, and everyone. Yes, we have released a couple of days ago our annual report, and earlier today we held a presentation. We are happy to be part of this platform. Anas has published some analysis on Donkey Republic, and we are happy to iterate some of the messages we've been sharing with investors. Make sure you have a good understanding. I don't know if you want me to go into talking about 2021, but I think we wanted to rather just go quickly to a Q&A, have a more interactive session. We assume that you have looked at our report or potentially even the webinar that we've just done an hour ago.
Yes, everyone has received the numbers beforehand, so I think that everyone has a good idea of how 2021 was for you guys. So I think it's good to just go right to the Q&A, and let's see what there is to answer. So the first question, how often does the bikes have to be replaced, and what does it cost to buy a bike for you?
Yes, it costs us between 500 and 550 euros for a pedal bike, and it's around 1,600 euros for an e-bike, including the battery at the moment. The vandalism rate of bikes or bike losses are around 3-4% per year. Yeah, I think that kind of covers the two questions you asked. Is that correct? And we have about 60-month lifetime on both bikes and e-bikes at the moment.
Okay, so if a bike isn't damaged during the period, then it should last around 60 months.
Yes.
Yeah, okay. And maybe that takes on to the next question. Do you know how much you in that lifetime earn per bike? So what does it cost to acquire the bike? What does it cost to operate the bike? And how much do you earn in that 60-month period?
Do you want to take this one?
Yeah, so if you talk about the cost that what Adam just mentioned, and right now we see that we earn with a bike approximately 40 euros a month, and we have a cost of operating it of around 30 euros, which gives us and the cost includes also depreciation of the bike. So that is basically both the cost that we have to pay our mechanics, to pay for spare parts, workshop, but also for the depreciation of the bike, which is similar also to the financing cost of the bike, because most of our bikes we try to get financing for. And that gives us then the overall profitability that we have. We have several measures and ideas in place how we see that we could increase it over the coming years. And I think the biggest part to mention here is the increasing importance of public financing, something we always highlight in our presentations, because so far this is just money coming in mostly from our riders when they pay for it. But now, for example, with the city of Antwerp, we have a very big contract in place where we get additional revenue from a city or from a partner of the city, which is a fixed contractual income that we have over a period of 10 years. And we have several other contracts like that in place. That is one thing that we see how that would further increase. And another thing is what I just mentioned is the pedal bike. And with e-bikes, we have a higher revenue because you can simply charge more for it. It costs us more. And also the operation is more expensive, but the revenue that you can charge for is of course also much higher, and that is also something that will drive up our revenue and respectively the earning as well. So there was quite a long answer, but I hope that covers all the points you were asking for.
Yeah, perfect. So the e-bikes, do you expect the higher margins on that one then?
Yes, we do expect higher margins.
Okay, perfect.
Yeah.
So you have different cities. You have Tier 1, Tier 2, and Tier 3 cities, if I remember correct. Which marketing channels do you use to reach users in Tier 1 and Tier 2 cities? Are they different channels, or is it the same approach that you use in these different tiers?
We are trying different channels, firstly, and we are also reaching cities through partners, and we are reaching out to different types of partners. So it's not always a direct connection to the city, but oftentimes it's through a partner. That can be a mobility operator. It can be in the mobility business, someone related to car business, for example, or even a bike business. Yeah, so we do use different channels. A lot of it is online, and a lot of it is also attending conferences and making these introductions and meetings. We have done a lot more outbound in the last 2 quarters compared to the previously. And still, I would say most of our inbound, our pipeline is inbound contacts and referrals.
Okay.
We're talking about partner marketing specifically, not rider marketing. Correctly understood, right?
Yeah.
Okay.
Okay, can you then provide some kind of information about the local profitability? If we take some of the cities that maybe are more mature than others, what is the profitability, for example, in a city like Copenhagen, where you have been some time?
We have not been publishing numbers on a city level, so we can't share any numbers on any specific city. But we are very keen on having profitable operations across the board. That's our approach, and we usually get there within very little time. And yeah, our operations overall are profitable, and there are some cities that are more profitable than others, obviously. But yeah, we don't have a problem in reaching that in also non-subsidized donkey cities.
Okay. So is it easier for you to become profitable in a larger city like a Tier 1 city, or is it just as easy for you to become profitable in a Tier 2 city?
Yeah, there are several factors that really touch on this subject. In some cities, we see visitor traffic is clearly one indicator where we can make a lot of money quickly, because it's very, very convenient for visitors to have a bike that they can keep. Often it's Tier 1 cities that will get more visitors, but there are some Tier 3 cities that for some tourist attraction can also be a very interesting destination. Most of our Tier 3 and increasingly our Tier 2 cities are subsidized or getting public funding, which makes sure that they are also profitable. And it is in most of our Tier 1 cities, we are not receiving any public subsidy, and we have to be competitive and receive it from the riders. The profitability there also is somewhat affected by the amount of competition, how the market is regulated, and overall modality and things like this.
And just one thing to add maybe from the cost side is that our business model in general is quite flexible in regards to the size, because in order to operate in a city, you basically need a mechanic to take care of the bike, which we call shepherds. And they need to have some small space as a workshop, because most of the bike repair is actually happening on the street, which allows us very well to scale with the size of the city, the operation, which means that for a smaller city, we don't need the same large-scale operation that we, for example, would have in Copenhagen or in Berlin. And that allows us to be quite flexible in regards to the cost structure, aligning to the size of the city.
Yeah, perfect. So I know you have answered this in your annual report, but let's take the question here. When do you expect to be profitable as an entire company? And how much do you expect to grow revenue over the next 5 years, if you have some numbers on that?
I can start with the profitability. So our aim is that we will be EBITDA positive as of 23, meaning that the business will be overall cash generating if we deduct just the cost from the revenue that we are making. And then we expect to have a overall profitable EBIT as of 24. And as of that year, we would be an overall positive cash generating company. So not only a positive EBIT, but we would also have a positive cash flow after the cash flow of paying back all our debts and so on. So that as of 24, we are generating good money. And our aim for the revenue side is 25 to 30 million. Maybe you want to say some more on that.
30 million is for 2024. We see company in a very good position to continue a strong growth also beyond 24. So we are aiming at 9-10 million this year and 25-30 million in 2 years' time. We expect that kind of growth trajectory, maybe with a bit of reduced acceleration, will continue.
Yeah. And so if you want to continue growing after 2024, do you then expect that you have to raise more money to grow there, or do you generate enough cash that you can do it by yourself?
We have ramped up our investments into product and business development, and right now we are not expecting to do another large ramp up. We can continue the growth without having to burn through cash. The main part that is part of the growth is, of course, vehicle financing, and that we see also is increasingly easy while we deliver the good numbers. So we don't really see any impediments to our growth currently.
Okay, perfect.
And maybe once again, also something to add on the cost side is that we have a large investment in the organizations this year. So, and that's also why we are not increasing our profitability compared to last year. So we still expect to have a loss of around minus 50% of the revenue. And the reason for that is that we are, what Adam just said, expanding the sales team, but also investing in the development of our products. 23 and onwards, we don't see further growth needs on the organizational side. We think we have everything in place. Maybe something here or there, but that also means that then the growth revenue is more or less directly going down to the bottom line.
Okay, so does that mean that you expect the fixed cost from 23 and onward to be somewhat fixed and not rise that much beyond that?
Yeah, correct.
Okay. So that maybe it takes us to the next question. I know that you have in your report a goal in 2024 with around 5 to 10% in EBIT margins. So if you expect that the fixed cost will be somewhat stable around 23 and onwards, does that mean that in 24 this is just the beginning of the profitability and it's not the end goal, that you mean that you can become 10% profitable? Do you expect you can be even more profitable 5 years, 10 years ahead?
Yes, definitely. We see our operating margins of profit margins are well above the 5-10%, and we see that this is the beginning of profitability, and we should be moving towards 20+% over time profitability.
Okay, perfect. So that's in EBIT margin, 20%.
I would have to. Yeah, we haven't. So we did not publish any specific numbers of that. But if what we do say is that we have a trend moving towards 24, both in regards to the cost and in the revenue, and that we don't see any reason why these trends should not continue. And that would result then in a margin in that area in the following years. it's something actually that we will probably look into more in the course of the year to give some more guidance on how we see ourselves long term.
I think what's important to mark is some of the key trends in the especially high profit business that Donkey is running, on the licensed business, on the subsidized mass business, and regulations overall. So there's a lot of industry trends that can affect it. But what we currently see is that this is attainable with the higher profit margins.
Okay. I don't know if you can answer this because you don't report on local basis or city basis. But do you have any locations at the moment where you are 5 or 10% profitable, so that we know that it is obtainable? Can you say anything in that regard?
Well, we've shared an EBIT bridge graph or diagram. I believe it's part of annual report as well. And if you look at 2021, the ratios there are correct to numbers, and the operational margin there is already above 10%. So this is important to note. You don't get operational margin above 10% if some locations are, or we overall are obviously profitable. And that is also the SaaS business, and including hardware sales and subsidized mass business, but also non-subsidized mass business. And we're happy to report that all 4 legs are separately also marginally profitable. So take the fixed costs out. Each of those 4 business legs are currently profitable.
And in addition to that, the cost we have as headquarter cost, as we mentioned before, is mostly targeted on growth, meaning we don't have a specific split of that published, but it's a large part of that is aimed for the future, meaning a sales team that is now looking for new deals, product development team that is developing new products that we haven't sold yet. So there is a limited amount of people needed to maintain that. And if you take those things together, you can conclude that we are already there in regards to the profitability you're mentioning.
Yeah, perfect. Thanks. So what is the unique selling points for Donkey Republic to investors or coming investors? If someone has to invest now, what would you tell them that would convince them that they would be a happy investor in like 8 or 10 years?
That's an interesting question. I think investors care about different things, but if we specifically talk about Donkey's position in mobility market and where this market is going, we're, I think, in the beginning of really a micromobility revolution. There is about 20% growth in this industry year on year. And then Donkey's position in this industry is quite unique and well established. We were able to endure some of the large waves with Asian bikes coming in and scooter companies coming in. But it actually helped us establish a very strong brand, both with cities and riders. We are selling not only the rides, but also the ride-sharing system towards utility companies, public transport companies, and cities. And that is a quite different focus than mainly scooter companies that are focusing on large cities and focusing on riders. So we are looking at smaller towns, and we are focused on bikes as the vehicles. And we are becoming part of public transport. I think those are the key unique selling points of Donkey. But we do also, I think it's good to underline that we have Danish Growth Fund, European Investment Bank, and a couple of pension funds in our investor portfolio. And there's a high level of scrutiny and long-term investors, long-term and patient investors who are backing the company. We're doing, I think, a lot of work on impact assessment and calculations, and we are very serious about our impact, and we believe and bet on positive regulations, which means that we will likely partner up with cities and public transport, which are at the forefront of delivering green transformation and the future trends way of regulating mobility in general. So I think we are a future-facing company with a strong set of investors and have been an innovating company that did many firsts in the industry with the Bluetooth locks, with the hub-centric operation. And we have a couple more of such firsts in the pipeline that we think are quite exciting. Yeah, I think it's a bright industry to be in, and bright company in a bright industry.
Yeah, perfect. So yeah, there's a question here on the investor relations side as well. A lot of private investors find it kind of unreliable if a company spends too much on digital investor relation deals. Where do you see yourself in that space? How will you inform investors without spending too much capital informing them?
Yeah, we're both laughing because this is such a strange pressure point. We're a listed company in Nasdaq First North, where prices seem to be quite volatile, and when we look at other listed micromobility companies and the multipliers, then we tend to think that our price is on the relatively low side. Yeah, we could spend a lot of money on trying to do different initiatives, and some of the companies in Nasdaq First North have done it. It seems the trading is rather shallow, and it's difficult to strike a long-term, let's say, healthy level of the stock. So we kind of have a decision to focus on running the business and not so much on the stock, but we do want to do the bare minimum. And so we try to pick the few relatively well seen investor relations outlets that we experienced and heard of from other companies as well, and try to limit our efforts both financially and in terms of hours to those. And we are doing a few things, but we're trying to not do an overkill. I don't know if you have anything to add.
No, I think it sums it up quite good. I mean, of course, we have to say we are also on the stock market now for close to a year now, so there's still a learning curve on how to best do the IR work. But what we truly believe is that our fundamentals, our business is doing what we promised before, and we work very hard on the execution of that. And we also believe that long-term investors will see that the more reports we are publishing and that is coming our way. And at the same time, we try also to write quality information, and not just to make a lot of noise on LinkedIn or catch a lot of likes, because as Adam said, the whole company is really built for sustainable long-term growth in the right direction.
Yeah, perfect. So do you think that it might have been kind of a disadvantage being one of the first micromobility providers going public, that investors might not have such good an idea of how profitable can a company like yours become, or how much can you grow before the market is filled, or don't you see that as a disadvantage?
Well, I think, tough question. I think it's difficult for investors to foresee what this industry will amount to. But I think it's good to mention that we had, for example, telecom industry going through a transformation, or media industry going through a transformation, so a big disruption. And here we have second largest industry after real estate. Transport is the largest percent GDP terms, and a lot of people, McKinsey has done a report, within the next 10-20 years we're going to look at a different landscape, and this company has the right fundamentals to be a winner in that landscape, we believe. So we hope that the like-minded long-term investors will go along.
Yeah,
and I think it's also the bright perspectives that we see in the industry and for Danke. The downside of it is also that it's a growing market where we are just at the beginning, and that also, of course, the growth potential is there, because so far not that many companies have managed themselves to bring themselves into a position like we are, and that simply means that there's not enough understanding on how the business works. We need to do a lot of explaining on the public funding and on the unit economics in that regard. But as we said before, we see that it's working. We delivering on the strategies that we laid out for us, and we personally, and the management strongly believes that then the success will follow also in regards to our evaluation by the market.
Yeah. So maybe a few remarks around the 2021 results that you just came out with. I saw that the number of trips in 2021 was the same as in 2019, but the revenue was above. How would you explain that your revenue went up, but number of trips is somewhat the same? I know you earn more per trip, but why?
Yes, I think before I answer that, I just want to say that even though we have similar number of trips in 21, we actually have a lot more trips in half two of 21 compared to half two of 19. But half one was COVID stricken, so we actually see a lot of growth towards the end of 21 compared to 19. With that aside, it is mainly price adjustments and new products, like the day deal product, and having more people using the bikes at the new price structures. And we also adjusted our prices during COVID, especially our membership pricings were adjusted. And yeah, we had some heavy using members that are not anymore or as heavy users as before. You might have seen a lot of Volt users in Copenhagen on donkeys in 2019, for example, which is not so much more the case. And that is also, replaced by more expensive usage, if you like.
Yeah, okay. So you won 44 deals in 2021. Do you know how many of those are already operational and how many will become operational in 2021?
I don't have the number of how many of them will be operational 22, but there is typically some months, so a couple of months to 9-10 months, depending on the size of the deal that it takes before the one deals become operational. Antwerpen is obviously a big one, but there are also other deals that were won last year and will be operational this year.
Okay. And I followed your investor presentation here at the 3 o'clock. You mentioned that you had prepaid for some bikes. How many bikes have you prepaid that you will receive here in 2021?
It's 10,500 fleet vehicles and a combination of bikes and e-bikes that are paid for and we will be receiving.
Okay, and do you expect all of those to be operational in 2021, or is it also to cover some growth in the next years?
They will be operational within 22. Sorry, 22.
Yeah, 22. Yeah, okay, and then there's a question here. Where do you get the bikes from? And how about the helmets?
I'm not sure if you published where we get the bikes from, but we can easily say we're not impacted or affected by the ongoing war in Ukraine, or we are impacted very little with some of the bike parts being produced in China, but some of the assemblies happening in Europe and some of the assemblies happening in the Far East at the moment. And the second question was?
Something about the helmets. I don't know exactly what the question is, but maybe maybe we can take a step further. Are you? Is there any risk in the different? Yeah.
Helmets are only required for bicycles in Australia. In none of the European countries, helmets are not required for bicycles, neither for shared bikes nor for private bikes. And that's how it should be. And there is a requirement now for e-scooter users to wear helmets. The Danish Ministry of Transport published that based on their numbers, they had 7 times more accidents on scooters compared to bikes. That's also the experience of many other cities because their form factor means that they can tilt a lot easily at a similar speed with the rider on top of, with a shorter distance to the front wheel and a lower height. So we don't see a trend requiring helmets for bikes like it is being required for e-scooters. And we don't expect to offer helmets other than some kind of marketing gig at some point potentially.
Yeah. And you mentioned a little bit about Ukraine. With the war in Ukraine, there's more focus on the green energy and green innovation. Do you expect to kind of have some positive influence on that?
It's hard to talk about the long-term effects, but we can see the short-term effects very quickly. As COVID also proven that there was a lot of short-term negative effects, but the long-term positive effect was that the reconstruction funds of EU after COVID is focusing a lot on bike infrastructure. As you say, clearly there's even more focus on green transition and less reliance on fossil fuels, and hopefully that will also make bikes even more come in the center of mobility options. In the short term, the negative things that we see with this war is also some raw material prices are going up, which are also used with bikes. And regarding logistics, there's a bit of a challenge that everyone else is also experiencing, but nothing special to bikes or to Donkey.
Okay. Now, there's a question that reads, I have noted that the board of directors do not hold any shares except your chairman, Caroline Søborg. Is that because they do not believe in your business, even at this low stock price?
Interesting. So 2 of our board members are representing larger investors into Donkey Republic. So Jesper Liddedal is Vækstfonden or Danish Growth Funds representative in our board, and they own about one third of Donkey Republic. And the other one is Erik Vengren from Spintop Ventures. They, I believe, own right now about 7%. The others are people we have sort of recruited. Caroline owns some shares and the others also have received shares in form of warrants, and some of them have been exercised. I can't comment why they wouldn't buy Donkey shares at this point. But I can say is Laurent, for example, has been founder and CEO of a large cycling company or bike sharing company, which we are very pleased to have. And he is there because he believes in our vision, having left his company, which was taken over by their main investor when they had some financial issues where he made an exit, and now he's part of our board.
Yeah. Okay. Perfect. I also saw last year that there were a few deals within the micromobility industry. Some scooter companies acquired some bike sharing companies. Do you expect to get more competition from in these acquisitions, or do you expect to self be acquiring companies in the future?
There is a trend of consolidation right now. You could say people talk about in micromobility, and that has both positive and potential negative effects. Right now, one of the positive effects that I see is you have fewer players and fewer players trying to grab some market. That means there are they pick their strategy and their focus, and it becomes easier for us to see what are the areas that are untouched or less focused on. I think we have a more right now the space is clearing up with some of the companies, either small ones closing or being out of the industry or being bought out, and we can see that Donkey's positioning is becoming even more clear and unique. Whether we would be a target or potential acquirer, that the acquisition was not really a key part of our IPO, and is not a central part of our strategy. As we said in the IPO, we would be keeping our our eyes open for any interesting opportunities, and that we do. Being a target for acquisition, we are also not counting on it, or that's not what drives us, but we're also not writing it off.
No. And then on the operational side, I live in Odense, for example, and I can see that at some places, Donkey Republic bikes are often used, and other places I can see the same bike being parked there for a very long period of time. Do you have any data to show you that some areas doesn't work, so that you can move the bikes to other parts of the city, or how do you do that?
Yes, we have a very smart rebalancing algorithm that tells our operations managers in each city when and which bikes they should move from where to where. And it only triggers when it calculates a higher return on each bike rebalance compared to its cost. So if a city doesn't have so much demand forecast that it justifies to move a bike, then it would not recommend a bike moving. Yeah, so that's how we're running it, and we're quite happy with the results we see.
Yeah, perfect. Yeah, and I don't think we have so many more questions, but I think you might have read the analysis that I made on Donkey Republic, and going into 2024, I have kind of a low goal or a low forecast on revenue, just to be sure that you can obtain that revenue. Do you think that when you read my analysis that it is too pessimistic? How will you manage to reach your own goal in 2024? Does it require a lot of effort, or are you quite sure that you can reach that goal?
I think for reference, your analysis foresees about 13 million euros revenue in 24. Is that correct?
Yeah.
About half of what we are forecasting. Yeah. Do you want to respond to that question?
Yeah. So maybe, I mean, we gave a guidance of 9 to 10 million out for 22, and the guidance is driven by, I think, three major components. The first one is that we see an increase in rider activity in the second half, what Adam said and what we also presented earlier, and we expect that to continue, and we expect that also to continue in 23 and 24, meaning that with the existing fleets that will be newer, we'll be getting 10,500 bikes. That should give us a good advantage, and even if the fleet does not grow much more than what we have by the end of the year, we would still see a large potential to drive the revenue per unit more, as you could also see between 2019 and 21, the jump there. Then, of course, if we stay with the fleet, we expect to grow the fleet because we see good potentials on the debt financing side to get the funds to grow that further. So I think just taking that into account is a large driver of it. The second part is then deals like Antwerp, where we get, for Antwerp, we published that we're going to get 1.6 million ARR there, and there's potential to extend that deal. And we also see that there are more deals like this coming. And as we explained earlier, we are in a very unique position compared to our competitors, so that we see a good chances there. And that is something where with one deal, you can suddenly increase quite a lot your overall revenue. And we see that it's realistic to assume that some more of these deals will come in the coming 2 years. And the last point is then the partner business that we're running. So it's not only us doing it, because we also have an increasing partner business that's driven by us selling the bikes, which is a one-time revenue. Of course, that is, you can say, okay, how sustainable is that? But we're making a good profit with selling the bikes, and we see no reason that the overall growth of that market should stop. Plus, every sold bike will generate recurring revenues for years to come, because we also see a very low churn on our partner base at the moment, and have a lot of ideas in our head and in progress on what we can do to improve that business area as well. So I think if you look at the success we have with our fleet so far, and that what we have in the pipeline in regards to bike purchases, plus the potential of public financing, plus the SaaS side of things, we're quite confident that we can achieve this year's guidance, and we see no reason that we should not grow further, even if one of those legs doesn't work out as planned. So the 25 to 30, from our opinion, we still stick to it. That's why we put it in every presentation. And if your guidance is now based on 13 million, I think that's something we feel very confident on achieving.
Yeah, perfect. So I also find that quite interesting, because my forecast is always based on a very pessimistic number, just to make sure that we find the lowest number you have to reach in order for it to be a good investment. So if you still think that you can reach around 25 or 30, and I'm only counting for like 13, then yeah, the analysis should be upgraded if you reach your goal this year. So I look forward to follow you this year and see how you come out of 2022. And I should also,
one thing to add is, because I always like to talk about cost, because it's part of my job as a CFO, is that we don't expect it, but the pandemic taught us also to be very quickly reacting to any changes on the revenue side and adjust our cost base accordingly. So I think that is a skill set we move forward, which helps us now to ramp up costs, but also in regards to ramping up costs, we always keep in mind what if, and that I think gives us the confidence also that we can do a lot of growth and know, okay, if something does not materialize as planned, it would not hurt us too much on the bottom line, because our cost structure is built in a quite flexible way, especially if we look at the cost of goods sold and cost of rental.
Yeah. Okay, and I should also add there that in my analysis, I am accounting on a 12% profit margin when we go a lot of years ahead. So if you can manage to come upwards around 20%, then I'm also very pessimistic on that end. So yeah, it's quite nice to hear. I don't think that we have any other questions. Do you have anything you want to add here before we end today's presentation?
It's a bit of a feel-good thing. We are launching very soon an investor program where there will be some donkey credits. So if you hold 10,000 plus shares, donkey shares, you'll be getting twice a year some donkey credits to actually use the bikes and enjoy the service that you're supporting.
Okay, perfect. Glad to hear that.
Yeah.
So thank you for your time, both of you today, and thank you for all of you who listened here. I hope that everyone got something out of the presentation, and that everyone who had a question got an answer to that question. So thank you for following along, and we'll maybe talk to you next year when you come out of 2022.
Thanks for having us.
Thanks for having us. Look forward to it.
Thank you. Bye.
Bye.